Let's get started. So, as always, question time. So, what happens when the US dollar drops more than 1% in 2 sessions and the yen starts flexing on intervention fears while simultaneously Ethereum can't decide if it's stabilizing or sulking? Well, this gives you not a market, that's a kind of group chat where everyone is typing and nobody is pressing send. So for those of you who has never attended a session with me, good morning. My name is Francois. I am your market analyst here at ATFX Africa. And today we are covering 3 markets that are reacting to one big theme: shifting confidence in the US dollar and the countdown to delayed US jobs and inflation data that could reset expectations for the Federal Reserve. And let's be honest, when markets don't have fresh data, they don't become calm, they become creative. So, as always, this is me. So, I will be adding a certain element of humor to the session just because, well, I can't really take myself too seriously. So let's kick things off with USD JPY because this one has 2 strong forces colliding at the moment. So on the US dollar side, the dollar index is holding below 97 after losing more than 1% over the last 2 sessions. The key driver is the growing concern that foreign demand for US dollar assets may soften. That weakness followed reports that Chinese regulators advised financial institutions to limit their holdings of US treasuries to reduce concentration risk and manage the impact of uncertainty in US economic policies. So, in simple terms, when the market starts asking who's still buying, the dollar tends to lose some swagger. Now, on the yen side, the yen is standing out. It's holding around 155.7 after gaining nearly 1% previously, helped by renewed verbal intervention from Tokyo and fears of possible intervention after the election. So, just to give you some political context here, because it definitely matters. So, Tokyo's or Japan's prime minister secured a landslide victory with the ruling coalition winning a 2/3 supermajority in the lower house. That gives her a strong mandate to push forward with increased spending and tax cuts and see reiterated plans to suspend the 8% sales tax on food for 2 years. At the same time, markets are giving her the benefit of the doubt because she promised stimulus won't strain public finances further. Even though concerns about Japan's fiscal outlook are still part of the backdrop. So, why is the yen firming here? Okay, why is it getting stronger? This is the question we need to ask. Well, you've got verbal intervention risk. Crazy statement to make, but yes. Verbal intervention risk plus capital inflows as Japanese equities surged to new highs, even while bonds were under pressure. And of course, the big macro cliffhanger this week is still the US. Markets are watching the delayed US jobs report. FYI, I will be live tomorrow afternoon, 3:30. I will be going live at 3:15. So the actual jobs report, so the NFP report, is being released at 3:30. I will go live around 3:15 so that we can first have a bit of a discussion. I can go through some of my expectations. You can ask me some questions, and then we will obviously wait for the release, and then we'll look for various setups and react to what is going on at that specific point. Now, on Friday, we are also getting the delayed CPI reports, which could shape expectations for the Fed, with the Fed still expected to hold in March and an additional 2 cuts priced in later this year. Now, some additional things that are also worth noting: White House economic advisor, or the White House economic advisor, said US job gains may slow in coming months due to weaker labor force growth and higher productivity, which in essence is a fancy way of saying jobs growth could cool without the economy necessarily collapsing. Okay. If there's any questions about anything that I just covered, please feel free to ask. As I stated, I am here to assist. I am here to help. I'm here to provide clarification. Okay. Robert says, looks like USD JPY setups for the last week played out nicely. USD JPY setups for the last week played out brilliant. And we're going to discuss some new ones going into this week. So let's start there. Let me just pop up my chart here. Sorry, just give me a second. Here we go. Yeah. So yes, obviously USD JPY did have a beautiful setup last week. Which we obviously did discuss as well. So from last week Tuesday, we were around here when we did the market brief live session as well. So it was around this exactly kind of where we are right now. And we discussed some moves higher, especially if we broke above some of these previous resistance areas. And then obviously that happened. We spiked up beautifully all the way to the top. As Monday kind of kicked off, so as this week kicked off, we opened with a gap higher, literally hit that high point, so that solid resistance at 1.576, and we have been selling ever since. So that was an absolutely textbook setup. Even if you didn't get it on the nose, like just after midnight, because if we do go over to like an hourly time frame, you can see uh let me zoom in here a little bit. So here you can see we had that spike higher, next candle, beautiful rejection, move down, and then the sell was from there, which kind of started around 2 o'clock on Monday evening. And as I stated, it's just been a beautiful setup from there. So if you did get your entry around 2, you would have been in around there. You could have placed your stops just above resistance. And well, you could have done a 1 to 2, even a 1 to 3 risk reward ratio on this one. All would have been possibilities for a massive move higher. If you had the stamina for it, you could have probably still been aiming for about a 1 to 4, because I do believe it might still drop a little bit further. I wouldn't enter into a short position now, just because of the fact that price action at the moment is at a very weird spot. So from a safety perspective, it's maybe not the best entry position right now. But if you are in from there at the top, aiming for down here at 154.8 is a relatively good target right now. So definitely a great setup that showed itself yesterday and is still going strong. Now, that's yesterday's setup. Let's look at today's options. Let me just zoom this out a little bit again. So as you can see on our momentum indicator, stochastic is still pointing down. Even though it's oversold, it is still pointing down. That's the biggest thing we need to see here as well. So that means there is definitely still a possibility for a further decline, potentially pushing down all the way to that support zone, which is currently sitting around 154.5. Now, once we get to that specific level, then we can start reassessing. If momentum starts turning, etc., you can get a proper sniper entry, maybe dropping it down to like a 15-minute time frame. So just to give you an example, I'm just going to rewind down to the bounce that we saw at the end of Jan. So here, just to give you context, I'm referring to this bounce here. Okay. So obviously we're looking at the 4-hour time frame, we're looking at key levels in the market, but we're not entering trades on this specific time frame. So looking here at the 28th, you can obviously, like I said, if we drop it down to like a 15 minutes, I would say to do something similar now when we get to that support level. You can see here on the 27th, we got downs, support, change of character, not yet in. We came back down, and there, nice, clear, big change of character. Again, EMAs were all still very bearish, and you can see there was still a lot of consolidation that took place. However, a little bit later, we had this change in our EMAs, everything went bullish. Remember, we never enter on change of character, we enter on break of structure. because change of character just initializes the move as per our rules for smart money concepts. So here you had your change of character, everything went nicely from there, and then nice there break off structure. So from here, this is kind of where you can see this was also end of Jan was Friday morning. So this is kind of where you can get into your position. Again, maybe just go up a little bit of a time frame here. Stops, you can make it a little bit larger again because we're trading larger swings here. And from there, you had the ability to ride out a very nice 2-to-1 risk to reward ratio at least. So there was a minimum of 2-to-1, which got you back up to the top here just by waiting again, waiting for price action to turn, waiting for the EMAs to turn on the lower time frame, waiting for everything to be confirmed, then getting into the market. Remember, the best entry is not always the safest entry. So sometimes you have to look for the safest entry, and that's always the entry that I look for in every single trade that I take. So again, here we can see now, because again, what can potentially happen? We can push down to this lower support level. If price action doesn't agree, it could actually break through and then push down to the support at 152. But if the price action does allow for it and it starts showing reversal indication on that lower time frame, like I said, 15 or 30 minute, you can choose and you can get that entry. You can definitely look to trade it back up to that resistance level, which is currently sitting around 157.5. Traders, any questions regarding this, or do you agree? Do you have a different opinion to me? Again, I would love to discuss that. And obviously you can see here at the moment as well, like various setups, the way I normally approach the market. That's the entire purpose for these sessions, to gain better understanding regarding how to approach these markets and how to approach these setups so that you can obviously take the best possible setups when you start entering your own trades. I do have one comment here that just says, I totally agree with your USD JPY analysis. I really, really, really do appreciate that. So thank you so much for that, Robert. Okay, that being said, let's move on. So in essence, if we're looking at where we are right now, the yen has support from intervention chatter and post-election positioning, while the dollar remains on the back foot ahead of the delayed US data. And when intervention fears enter the room, USD JPY can move like someone just shouted, screenshots are on. So yes, just be careful. Okay, that's all I'm going to say. But when it comes to trading, we should normally be careful all the time. So remember, we take calculated risks, never unnecessary risks. Next up, Ethereum. And I know Robert's already smiling because it's one of his favorite pairs. So Ethereum is trading around $2,040 this morning. It is down around 2% on the session. And the bigger picture at the moment isn't pretty when we are talking about this specific cryptocurrency. So over the last 4 weeks, Ethereum is down 33.8% roughly. And over the last 12 months, it's down 20.6%. Now, that kind of sets the tone for what to expect at this specific point for this pair. So this is a market trying to stabilize after taking heavy damage. And it's happening in a broader environment where the US dollar has been volatile, risk appetite has been uneven, and the market is awaiting for the big US jobs and CPI catalysts that we can expect this year. Now, on the crypto end, just focusing on crypto markets at the moment, Bitcoin is hovering around $70,000. Okay, also not doing great. But retail interest at the moment is also low, suggesting caution. Ethereum can be described as, well, holding support, but weak technicals and declining futures open interest are keeping pressure on this crypto at the moment. So when we look at all the various reports, it highlights one thing at the moment, that if open interest continues to fall, it becomes harder to maintain stability above key support zones. So Ethereum's storyline today is simple. It's holding up, but it's not convincing anyone yet that it's looking to change. It's like watching someone It's basically like watching Friends and seeing Ross go, I'm fine, while you just know that they are not fine. Okay. So let's look at the charts. So here we can see from a technical perspective, Ethereum is delicately holding that $2,000 support. So that $2,000 is just sitting here. That's obviously a big psychological level at the moment. Okay. And it's barely holding on. Now, after the $2,000, we've got a larger support down here at 1,750. And if that gives way, we definitely know that sellers are taking control of this market and just pushing it in that direction. Now, if we have a look at the stochastics on the daily time frame, we can see here that we are in overbought territory, but we are starting to turn and momentum is starting to shift, where again, momentum is starting to shift, but it's still suggesting that bearish pressure is still present. Now, when we do look at the upside options, we also boxed in right underneath that resistance area, which is currently sitting at 2,200. And that's followed by that higher level, which is also just above that 200 period EMA, which is the $2,700 level. So Ethereum in essence today is less about trend confidence and more about whether stability can hold while we wait for broader macro direction. Okay. So looking at this on smaller time frames, I'll go to 15. Let's go on at 30. So if we have a look, here is that 2000 zone. So we are basically just holding on. Now, if you want to scalp trade this, Robert, you can weigh in. Obviously, I know you love scalp trading and day trading this pair. We've had a relative amount of consolidation, which was been running since last week, Friday. And that means you can obviously have a look at trading this range. So now you can drop down to about a 15, maybe even a 5. You can see here on the 5, we've got a little bit of change of character. So maybe wait for a little bit of a retest, break of structure, and you just look to trade it back to the top of the range. As stated, just be careful of that general larger trend, because the fact that if this 2000 level gives way, the trade options kind of change to a short back down to 1.8 or 1.750 even. And if that gives way, markets are going to look for much lower potential targets on this specific cryptocurrency. Now, if markets obviously, so if we do get this little bounce and we get a break above 2.2, that will start opening up some long positions, maybe to go and retest 2,700. It doesn't necessarily mean at this specific point that the market is changing direction. The trend is still very much down at this point, but you can see that our EMAs are widening quite a lot right now. So yes, the trend is very strong, but within every trend, there has to be some form of reversal. So even here, like you can see, EMAs open up and then it kind of has to narrow it back down, and then EMAs open up and then they have to narrow it back down. So just don't get caught on the wrong side of the trade on this one. Okay, just want to see if there's any comments. There's two actually. Looks like wants to turn around on the 4-hour, but I feel it might drop again. As I said, if you want to trade this with most markets at the moment, I'm not looking for, personally, obviously you've got your trading strategy and so forth, but personally, I'm not looking for larger long-term setups, just because the fact that based on everything that's going on in the market at the moment, based on all the various macro events, markets are literally changing their tones every week at the moment. Okay, so for me right now, I am not looking for 5-day, 2 weeks, or even a month setup. These are very difficult setups right now and also very dangerous setups right now. I'm literally looking for key levels, key breakouts, and just 1 to 2 day trades or even intraday trades where it still closes within that same day. Hence why I said you can either trade that range at the moment, so trading maybe back to the top of the range around 2,200, or if price action, but again, have your stop losses in place, because if price action drops below 2,000, it will most probably go and retest that 1,750 level. Now let's talk Dow Jones. The US30 is trading around 50,100 points at the moment. Actually, it's a little up at the moment. It's trading around almost that 50,200 level. Now, it is up slightly on the session. And yesterday's close was a new record high. I feel like lately it's not an achievement. It's almost everyday news right now, new record high on gold, on indices, on just everything. New record high, new record high. The index gained a total of 20 points yesterday, but here's the vibe for the day, okay? The market is moving forward, but it is doing so very, very cautiously. And the reason, everyone is obviously waiting for this week's delayed macro data. So yes, the Dow is at a record high, but it's also the kind of record high close where traders whisper, don't move too fast, you'll scare it. Okay. And I feel that it's kind of like hunting right now. Don't move too fast, you will scare it. So looking at various companies within the Dow at the moment, leaders obviously at the moment include Microsoft, Nvidia, and Cisco. Some lagging names include Merck, Travelers, and Nike. And investors at the moment are growing cautious, obviously ahead of the macro data that is set to be released. Now, moves outside of tech were more subdued. Okay, the market is leaning into that wait and see mode, even while trying to stay constructive. So the Dow today is basically doing what a disciplined trader does. Small moves, controlled risk appetite, and all eyes on the economic calendar right now. Now, if we had to have a quick look at the charts, the Dow is currently trading in that ascending channel that it has been for a while, and it is currently sitting right at the top of the channel. So again, one of two things can happen. It can either very similar to every other all-time high it's made this year. It can make the all-time high at top of the channel, come back to retest the bottom. Okay. If we look at the direction, the higher low should be around this 49,000 level. So kind of the support right here. Because obviously, if we have a look at the trend direction that it will take, is it will push towards here somewhere. Okay. Which by that time, that will more or less be the bottom of the channel as well. And that could be a proper setup at this specific point in time. However, there is a larger option as well. So if we have a look at this little spike right now, and again, using our Fibonacci extension levels, should we break out of this channel? Now, again, there's a larger channel that's been running for forever, literally since last year, April. So you can also draw that channel in if you want. But if this smaller channel breaks, it could aim for this 123.6 Fibonacci extension level, which is sitting around 51,400. Okay, give or take. So for me on this right now, I would literally just see to, again, drop down to some lower time frames. Again, keep one eye open on where you are right now. So if you want to take longs, I would literally personally wait for a breakout, potentially above 50,400, which breaks you out of that channel nice and cleanly. And that will kind of give you that momentum to aim for that 51,400 level. Alternatively, if we get that change of character, a little bit of a break of structure on the smaller consolidation that we have here, that could open up a potential retest of this 49,000, let's call it 49,600 level, and then potentially the bottom of the channel, which would then be around this 49,000 level. Okay, see if there's any comments too. Any thoughts on Euro USD, Trevor? Not a problem. I'll open that for you now as well. Apparently, a lot of markets are going to climb hard for the next 30 years, according to some predictions. I strongly disagree. Again, we have to look at past structure. Markets have never just gone in one direction for endless amount of times. We have bull cycles, we have bear cycles. So bullish cycles normally last somewhere between 4 and 7 years. And we are kind of reaching the end of our current bull cycle. Okay. Because we've been in this bullish market since about 2022. So we are kind of due for a reversal. So I mean, if we drop this onto a much higher time frame, just to show you guys this. So here you can see where this initial bull market started. And again, we have to understand these pullbacks. So yes, stocks will always keep climbing, okay? But we have to understand the cycle behind this. So here you can see the 2022 rally. 2022 rally, and I want to give you a proper date range on this as well. So the rally lasted 98 days. Okay, so we can call it 2 years. That rally lasted. After that rally, so if we then just have a look from the bottom of the rally, so if we have a look here, so let's go price range, bottom of the rally to the top of the rally. That was a 56% increase, but we dropped almost half of that during the reversal. And this kind of happens repeatedly. I mean, even look at the 2020 rally. So again, 2020 rally lasted 658 days. Again, almost 2 years. And again, if we have a look at the price spike, so 90%, 92% increase, but lost almost half of that on the retracement. And this is the thing, markets will always be moving higher. I mean, if I zoom out Dow to a monthly time frame, you will see that it is consistently pushing higher, but every 2 odd years, it loses half its value before it moves higher again. And this half its value loss liquidates traders. It literally takes them to zero. Why? Because they are overextending themselves on bullish momentum. And we have to understand cycles. So markets are not going to move in one direction for the next 30 years. Are stocks going to increase for the next 30 years? Of course they are. If we put this on a monthly time frame, you're going to see stocks have been increasing literally since this chart started. I can probably look for one that has more data, but I mean, this chart started in 2018. That's a straight shot up. But you know as good as I know that it hasn't just been a straight shot up. And that's the part that we have to be wary of. And I mean, now, even if we have a look, so let's go back, date range. We are currently 308 days in, okay, on this one, on the specific rally. So that means we have a potential that this might still go on for another year. So till around the end of um 2026. Again, not saying it's going to, but I'm saying it could, based on literally every single rally we've had so far on Dow, where you can see markets are pushing up for 2 years and then drops, and then pushes up for 2 years and then drops. So again, market can push up for the next 2 years. Again, we're a year in, so we've got another year to go. So this could probably still nicely double what we have already accomplished in the last year. So from this drop to where we are there, that's a 36% increase. Every one of the other ones were 70 to 90%. So here we are at 36. Let's just say we go to a 70% increase. Okay, that gives you a potential rally all the way above $62,000 for the Dow. But that also gives us a potential 50% decline to follow. Literally brings us almost back at least to about 52,000. So again, everyone's an expert in a bull market, and half the people lose their shirt in a bear market. But it's being able to capitalize on each one of these moves and trade through them and survive. And that's how you get to do what I do for the last 11 years. It's not always just sunshine and roses, because the fact that we understand how the larger cycles behind the market works. I hope that made sense. Okay. I did have a request for Euro USD. Let me just quickly open that. Here we go. So kind of the opposite to what we looked at earlier on USD JPY. So obviously USD JPY at the moment moving down as the dollar is weakening. Conversely, Euro USD, because of the fact that here the dollar is your quote currency, not your base currency, Euro USD has been gaining momentum. But again, looking at all the charts, even our momentum indicators, everything is pointing towards that overbought level. Doesn't mean we are out of momentum just yet. Just means we are approaching that territory. So personally, I'm kind of waiting to see what happens when we get up here at 1.197, because either we are going to break above, and again, we'll wait to see what our price action does when we get here. We are either going to break above and go and retest that high at 1.208, or if price action confirms that we are running out of steam here at 1.198, again, then we can look for some lower levels, because why? Then it also shows a kind of a start in trend changing, because of the fact that then this would be confirmed as our higher high, and then it will start making a new. So that was our lower high, but then if we get to this point, that is a new higher or lower high. So, and that would then create a new lower low, lower high, and lower low again, potentially just aiming for this 5-7 for now. Potentially maybe pushing down to this level here around 1.147. That is definitely an option. That could even look something like that. So that is an option, again, just waiting to see what price action is doing when we get to this 1.197 level, and then seeing how markets are reacting from there. Okay, can't remember who asked me about that. Trevor, I do hope that answers your question on Euro USD. Just let me know as well. Okay, so as we are closing off the session, going into this, Trevor says, thank you for the analysis. Only a pleasure, but only a pleasure. So as we are heading into today and the rest of the week, the big question we kind of need answered right now is, when the delayed US jobs report lands tomorrow, does it confirm the idea of a slowing labor market? And how will that feed into the Fed's expectation that already has 2 rate cuts priced in for later this year? Because once data, concrete data finally arrives, the market won't just react. It'll rewrite the entire story that we are looking at the moment. And if you think this week has been interesting thus far, just wait until tomorrow's numbers hit your screen. And with that, we wrap up today's daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you are not trading with ATFX yet, simply head over to atfx.com and go and experience the difference for yourself. See, I have a comment here. Thank you so much, Francois. Greatly appreciate it, with the little heart emoji. Thank you so much for that. I really appreciate that. I got a bunch of other thank you messages coming through. Love it. Traders, until next time, stay sharp, stay focused, and trade smart.